How's it going, everyone? This is my closing trade alert for Twitter. I actually closed this trade a few days ago. However, I had a bunch of other videos already in the queue, so I didn't get around to making this until today. Which frankly, I kind of wish I would have waited till today to close this out, but hey, so goes. Alright, so this trade I opened on January 25th. I sold the March expiration 47 put, which was 42 days, and I collected a nice premium of $4.50 as it was an aggressive at the money put. And then 7 days later, which included 2 days of the weekend, so just 5 trading days later, I bought it back for $2.88 to close it out. Had I waited till today to close this out, which is the 5th of February, this is now only selling for about $1.50. So that would have left me with a $3 difference or $300 profit per contract in about, 11 days or something like that. So, oh well, I still came out with like 150 bucks on this and like 2.6% return on capital per day. So that's pretty good. Anyways, let's look at the chart. All right, so the quick summary of the trade, it was open for 7 days. The percent of max profit was 36% exactly. My return on capital was 18.2%, which is pretty great. And then my profit per contract was $162. Overall, these are the trades that I love. And like I mentioned before, I hadn't been doing these trades as part of my video series here, just because they technically are a little more risky. You know, I'm selling at the money puts, which are like, you know, in the 40 deltas, instead of, if you want to take the safe route, you're selling puts at like the 20 or 15 delta, or depending on the ticker, you can be way out in the 10 delta and still collecting a decent premium. But I figured, what the heck, why not make videos like this? This is how I'm making money, and that's what people want to see. A quick recap, I basically just wait for the big sell-off, and then I wait for it to show a rebound, and then right in here, I sold a put. And then just a week later, the price was already up here, and I cashed out for a quick winner. Piece of cake, frankly. And like I said, had you waited until today, you could have had $300 profit per contract instead of just my $162. If I had waited 4 more days, I could have almost doubled my money. However, with that being said, the reason I cashed it out so quickly is because I had 162 bucks in 7 days. And mainly, if you break it down on a daily basis, that's 2.6% ROC per day. And 2 of those days were the weekend. So it was only 5 trading days that I made that $162 on. So that's awesome. You know, if I could make 2.6% per day return on capital, I would literally take that every single time. You would practically triple your money in a year, right? I mean, 2.6%. If you had 10 grand, that'd turn into like what, 26 grand in 1 year? So anyways, so that's why I cashed out kind of early, quote unquote early. But yeah, otherwise this is still looking pretty strong. I mean, as you can see, it's had 1, 2, 3, 4, 5 real strong positive days here this whole week, I guess. Today's Friday and this started on Monday when this started gapping up like this. And as you can see, there's this Elliott wave count here. And the target price I have is around 61 bucks. And right now it looks like it's gonna get pretty close to that. I guess we'll have to wait and see. You know, if I was really confident in this target, frankly, I could sell another put here, right? I mean, I could sell a put at anywhere below like 55 and then ride this up for the next couple weeks, and I'd probably get 50% profit again. But you know, it's coming to this top here, at least a temporary top in my opinion, and I'm just not gonna push my luck. I mean, I did great here, had a quick easy trade. I'm just moving on and looking for something else. So yeah, that's pretty much it. I mean, I just sold an aggressive at the money put. You know, when I opened the trade on this day, I sold the 47 put here for $4.50, and when I did that, the current price was just above 48, so I sold $1 out of the money, and this thing went my way the entire time, and it still is going my way if I was still in it. So yeah, the strategy here is pretty dang simple. I just look for big sell-offs of what I considered stable companies, and then that's a perfect time to get in, and I sell an aggressive put, and I wait for the price to go up, and I get paid. It's that simple. You know, the one thing you got to watch for here is if you're wrong and this goes against you, you know, you're going to be in the money a lot quicker, right? You're going to be losing money faster. So a couple things here. I only do this on stocks that I ultimately wouldn't mind exercising the contract on and buying 100 shares at $47 here, right? You know, if this had dropped all the way down to like 40 bucks, I wouldn't like it, but I could just let this expire and then get assigned 100 shares at 47 bucks. And then I could just start doing the wheel, right? Which means I would own 100 shares at $47, and then I would just start selling calls, a naked call against it, and that turns it into a covered call, right? Because I have 100 shares per contract. So then I could just do that until I make my money back. And, you know, I'm pretty confident that Twitter would rebound and keep going up. And sure enough, it did. Or the other alternative is, instead of, you know, getting assigned that stock for $4,700, I could just roll it out to the next month. You know, instead of having the 47 put, maybe I'd get into the 46 put or something, right? And then roll that out and keep waiting until ultimately it comes back. But again, for that strategy, you better be confident that the stock you're trading is going to come back up to the price you need it to, right? If you're trading some crazy penny stock or something that's super volatile, it might never come back, and you could roll it out and you just lose more and more money, right? It's not quite as bad as a naked call, but you can start losing a lot of money selling naked puts too. Anyways, I'm probably just going to let this peak out here, correct back down. It should, you know, in theory, this is a wave 5 high. Then there's going to be an ABC correction here if you're following Elliott wave. But then also, you know, the MACD is real strong right now, but it could be peaking out. And then the RSI is getting up there too for the day, right? I mean, last time the RSI and the MACD peaked was right back here at this level, and it went from, you know, 55 all the way down to 45. So if it does that again, if it gets up here to like 60, 61, and then falls back down here to like 50, you know, down here in the 50 range would be a great target that I personally would be looking at to sell another aggressive put in Twitter. That's assuming nothing major changes with how they operate their business, right? And or assuming the overall market doesn't take a major dive in between now and then, which some people are calling for, but I don't know. I think that's a little bit of a stretch. There might be a correction, but I don't think there's going to be a huge crash. Not this year, but who knows? We'll see. All right, I've rambled on long enough. Thanks for tuning in. I'll catch you in the next video.